Let me now walk you through exactly what happens to Stretch at each key Bitcoin price level. These figures are derived from Strategy's own SEC Form 8K filing of 25 May 2026. Not estimates, not projections, filed documents. Current position as of that filing: 843,000 Bitcoin held. Average cost basis of $5,694 per coin. Convertible notes outstanding, $6.7 billion. Total preferred stock outstanding across all series, $15.5 billion. US dollar reserve, $871 million. Bitcoin at $50,000. Total Bitcoin treasury value falls to approximately $42.2 billion. Coverage ratio, 1.9 times. Obligations. Stretch estimated price, $82 to $88. The at-the-market share offering mechanism, which is how Strategy raises new capital, by selling Stretch shares at $100 par, freezes entirely. No rational buyer pays $100 for something trading at $85. Strategy's primary funding mechanism stops. The reserve covers approximately 6 months. Daniel's $40,000 is now worth approximately $34,000. Bitcoin at $40,000. Total Bitcoin treasury value, $33.7 billion. Coverage ratio drops to 1.52 times. Stretch estimated $70 to $78. At the market offering completely frozen. Strategy is now forced to sell approximately 42,500 Bitcoin per year just to cover dividend obligations. That is over 3,500 Bitcoin per month entering the market as forced selling. Daniel's $40,000, approximately $29,600. The dividend is still arriving, but the dividend is now being funded by selling the very asset Daniel was told was backing his investment. Bitcoin at $30,000. Coverage ratio, 1.14 times. Stretch estimated $55 to $65. Strategy needs to sell approximately 56,667 Bitcoin per year at this price just to meet obligations. That is 6.7% of their total holdings liquidated every single year purely to fund preferred dividends. The board faces a decision point here. Suspend dividends and watch Stretch collapse to near zero, or keep selling Bitcoin and watch the collateral base erode toward insolvency. Bitcoin at $20,000. This is the insolvency threshold. Total Bitcoin treasury value, $16.9 billion. Total obligations, $22.2 billion. Strategy cannot pay all preferred holders in full, even if it liquidated every Bitcoin it owns today. After convertible debt holders take their $6.7 billion share, only $10.2 billion remains for $15.5 billion of preferred holders. Shortfall, $5.3 billion. Stretch holders receive cents on the dollar in a forced liquidation. Daniel's $40,000 is worth approximately $17,000. Bitcoin at $10,000. Full structural failure. Only $8.4 billion in assets against $22.2 billion in obligations. After convertible debt holders are paid, approximately $1.7 billion remains for $15.5 billion of preferred holders. 11 cents on the dollar. Stretch price near zero. Daniel's $40,000 is worth approximately $4,800. Now here is what happens when the 80% of Stretch holders who are retail investors start selling simultaneously. At $50,000 Bitcoin, the first wave arrives. These are the informed retail holders. The ones who followed the news. The ones who saw the 32 Bitcoin sale in June. They sell. Not in panic, in calculation. Their selling removes Strategy as the dominant buyer of Bitcoin. Strategy has been the single largest buyer of Bitcoin for over 2 years, consistently outpacing the combined volume of all U.S. spot Bitcoin exchange-traded funds. When that buyer disappears, the market discovers what Bitcoin is actually worth without the support. That discovery is rarely gentle. At $40,000 Bitcoin, the second wave arrives. Evils are the confused retail holders, the retirees, the income investors, the people who told their spouse they found something better than a fixed deposit. They open their brokerage statement. They see minus 25% on a stable instrument. They sell. Not calculated. Frightened. Think of it like a bank run. A bank is perfectly solvent. Every depositor can get their money if they wait their turn. But if every depositor arrives simultaneously demanding their money, the bank cannot pay them all at once even though the assets are real. The act of everyone trying to exit at once causes the very problem they feared. Stretch at 80% retail ownership is structurally vulnerable to exactly this dynamic. At $30,000 Bitcoin, the third wave arrives. Everyone remaining. DeFi protocols holding Stretch as collateral. confirmed in Strategy's own SEC filing, face automated liquidation thresholds that fire without any human decision. The MSCI index removal risk activates. If Strategy shares are removed from the MSCI index, passive index funds tracking that benchmark must sell their Strategy positions simultaneously. Mechanical selling. No human decision required.